Welcome back to the channel. Today we're going to be covering off a simple investment strategy I like to call volume investing. For background, if you've been following my channel so far, you know that I'm what they like to call an XRP maxi. But long before I had ever even discovered cryptocurrencies, I was actually an S&P 500 maxi, specifically the Vanguard 500, known as VFIAX, and the Fidelity 500, which is known as FXAIX. Now, Vanguard I would buy in my brokerage and my Roth IRA accounts, and previously when I had a Fidelity account, my 401k contributions were going into the Fidelity 500. I learned early on in life, after being burned by a few different stock picks that I had, that I really liked the mutual fund approach, and on top of that, I really liked being able to dollar cost average into them. The volume strategy, which I'm about to cover off in this video, works both for stocks and cryptocurrencies. That being said, I actually especially like it for cryptocurrencies, usually due to the low price of tokens and also the extreme volatility in the markets. Starting from the beginning, I spent the first 10 years of my professional career primarily investing in VFIAX because I wanted that to be the vehicle to my early retirement. Early retirement was something that I had discovered very early on in my career. I knew that there were things about working in the corporate world that just didn't align with how I wanted to live my own life. And so from a very early standpoint, I was already planning my exit strategy. For about 10 years, I would invest strictly into the Vanguard 500 and also the Fidelity 500, depending on which account I was in. 401k for Fidelity, Vanguard for everything else. And that worked out tremendously for me. This is a brand new channel, but sometimes I wonder how things would be different if I started making content years ago, back when I was still investing in stocks. As of right now, I'm no longer contributing to any sort of stock market, whether it's an individual stock or even the S&P 500 ETFs and mutual funds. That doesn't mean that I'm selling them. I'm a buyer and a holder. I'm going to let what I already have keep working for me. I'm going to let it do its job and I'm going to leave it be. For me personally, at this point in my life, I'm only contributing into cryptocurrencies. Take what you're about to find in this video with a grain of salt. I'm not a licensed professional. Before making any of your own purchases, make sure to meet with a financial advisor or someone else who is licensed to talk about these topics. As always, do your own research. Anything that you buy, you could potentially lose. But with that, let's start breaking down what the volume investment strategy really is. Because I've moved into cryptocurrency and specifically XRP, I'm going to be referring to XRP as the reference point for the remainder of this video. As of today, November 29th, XRP is trading at around $2.20. With the information we currently have available, I want you guys to think about what are the vehicles that would drive XRP to meet the requirements of making you a millionaire. There's going to be two key elements. The first is going to be price, and the second is going to be volume. Now, if you only had 100 tokens, what would it take to become a millionaire? Well, you would need the price to be all the way up to $10,000. Mind you, it's trading at $2.20 right now. You would need to almost 5,000x your portfolio to get to $1 million. While anything is in theory possible, the probability of that happening for you is pretty slim, and even if it does happen, it's definitely not going to be in the timeline that you're happy with. Now, when it comes to financial independence, I get it. A lot of us are looking for an exit to escape the rat race and take a little bit more control of our lives. Maybe you're in a job you don't like, or maybe your station in life isn't working out for you. I get it. But the market doesn't move based on your personal problems. Now, on the inverse side, if you had 10,000 XRP tokens, what would it take to become a millionaire? Well, you would only need XRP's price to reach 100. That's far more reasonable, and because assets tend to grow logarithmically, we can be almost certain that XRP is going to cross $100, and it's probably going to happen a lot sooner than most people think. That's because the volatility in the crypto market far exceeds what people are used to with traditional stock. The S&P 500 tends to double itself about every 5 years. In the cryptocurrency space, that can happen in just a matter of days, and we've got plenty of examples from prior years that show exactly that. When XRP moves, it tends to move somewhere between 300 and 500%. So if we're looking at $2.20 XRP right now, the next time we see explosive growth with this asset, we could land anywhere between $10 and $15. This type of event only needs to happen 2 or 3 more times after that to cross through 100, which is why a reference point of 10,000 XRP is so amazing. Because look, if the price blows past 100, you're either going to be a bigger millionaire or you're just going to end up getting there sooner. And if you have more than 10,000 XRP, the benefits here just multiply upon itself. If you, for example, had 50,000 XRP, you'd only need it to reach $20 to become a millionaire. That's a lot more reasonable than waiting for an asset to cross into the triple or quadruple digits. Even if that is something I actually believe can happen, it still hasn't, so we have to take everything with a grain of salt. I do think a $20 XRP is definitely reasonable, and while it might be difficult for everyone to get to 50,000 XRP, the volume investing strategy is going to help you at least get started. And if you miss the boat on XRP, you'll at least be able to use these same principles on another asset down the line that will have a similar growth pattern to XRP. Maybe not as good, but it will be comparable. After all, XRP is loosely following in the same footsteps as Bitcoin did. So volume investing, it's all about having a paradigm shift. Most people invest by taking whatever money is left over at the end of the month once their lifestyle needs have been met, and they put the remainder into the market. As a volume investor, you have the paradigm shift that investing actually comes first and you want to build your lifestyle around that. If this is new to you, you've never done this before, I highly recommend doing a paper exercise where you're going to write down all of your cash inflows. So if you only have one job, this should be easy to do, but if you have multiple income streams, you just want to go through your statements and look at all the debits to your account to find out how much cash flow you've had on an average month, and then extrapolate that out to 90 days so that you have a 90-day moving average. The next thing you want to do is exact same for expenses. So you want to use either Microsoft Excel or Google Sheets. Google Sheets is free and gets the job done to write out every expense that you've had on a monthly basis and then move that out to 90 days. Once you have these expenses written out, look through them and see which ones you could live without. What we're trying to accomplish here is the maximum amount that you can contribute as principal on an annual basis. There's going to be 2 things that you can do to increase your principal, and that is increasing your inputs or reducing your outputs. Now, when it comes to income, in layman's terms, simply put, it's just making more money. This can be accomplished by getting raises, promotions, or picking up secondary work outside of your primary job. While a raise or promotion can either be unlikely or hard to get, you should always be able to find a job that's comparable to the one you're working right now, that is paying somewhere between 10 and 15% more than your current position. If you're not happy where you are at your own job, there's nothing wrong with applying and seeing what's out there. If you can nab a job that pays 10 to 15% more, that's going to really significantly increase how much principal you can contribute on a monthly basis. The second thing, and this is one that I'm a really big fan of, is going to be gig work. Now, gig work is usually low-hanging fruit. As long as you have a 4-door car, you can deliver people, food, and Amazon packages all day, all night, any time of the week, anywhere in your city. Gig work is low-hanging fruit, so it's probably not going to pay that great. However, if you're able to scrounge together an extra $500 per month post-taxes and post-expenses, that's going to be about $6,000 per year that you can add as additional contributions to your investment portfolios. Now, just to make this example easier, we're going to actually round that down to $5,000. Let's say that every year with your current salary, you're able to contribute a combined total of $20,000. If you add $5,000 to that, that is a 25% increase. If you do that for multiple years in a row, you are going to significantly increase the amount of principal that you can add to your portfolios, boosting their growth dramatically. As I said earlier in the video, assets tend to grow logarithmically, meaning the same amount of time it takes to take a value of 10 to 100, the same amount of effort and time takes it from 100 to 1,000. So if you think about it like this, the sooner you can brute force your way to $100,000, and if you're doing that through principal, it means there's no appreciation. That's hard-earned cash that you grinded out to get into those portfolios. The sooner you can get to $100,000, you can let that logarithmic growth take you from 100,000 to 1 million. In the same time allotment, you'll go from 1 million to 10 million. So I really want you guys to focus on getting that first 100,000 as fast as you can. Of course, some of you watching this video may already be there. Now, the other way to increase your contributions is simply by spending less money. As mentioned earlier, if you run those paper exercises, you should be able to find ways to reduce your spending and get your lifestyle a little bit more under control. Typically, if you combine both of these elements together, they're going to have a compounding effect. So you make more money, but then you also spend less. You'll be able to dramatically introduce your contributions that go into the market year over year. When it comes to cryptocurrency, this is especially important because, as we know, things are moving pretty quickly in the crypto space, and if you spend too much time on the sidelines, you might miss the opportunities altogether. Ideally, we all would have liked to have started in crypto sooner, but you get in when you get in, and you have to make the most of what time you have left available. Now, by the way, for those of you that have been watching my previous videos, I appreciate your feedback. As you can see, I've fixed the crack that was in the drywall. We're getting more decorations set up throughout the week. This channel actually was launched about 2 weeks ago, so we're still working on the aesthetic, getting things up to speed, but I greatly appreciate all the feedback that you guys have been giving me. I want to make this the best viewing experience for you as possible, so this type of feedback goes a long way. If you're enjoying the video so far and you are a new viewer, if you like what you've heard, it would help my channel a lot if not only did you subscribe, but you actually shared the video. Sharing a video is the #1 metric YouTube looks for when deciding whether or not a video should be spread through the algorithm or not. So those kinds of things really help me out. Now, moving things along, I really want to say that something that's super important, I feel like it gets overlooked a lot in investing communities. It's not to micromanage your portfolios. The more you try to rotate in and out of assets, or you try to time tops and bottoms and start flipping assets, you're going to eventually get burned. There are very few people that have any actual success with doing that kind of micromanagement. It's almost certain that you will eventually get burned and underperform. The best performing portfolios, oddly enough, are the ones where people just buy, hold, set it, and forget it, and they don't come back to that asset until the day when they're ready to retire. You can start using these assets as income. When you are ready to retire, that means that you're going to replicate the income you made while you were working with passively generated assets. At that point, it's okay to start liquidating. I really don't recommend doing it any sooner. The one exception I'll make to this is that I actually like to keep my emergency fund invested. So I will usually pick an asset that isn't my primary favorite. For example, I really like XRP. So I have a little bit of Solana, Ethereum, and Bitcoin on the side that I use as an emergency fund, because if something happens and I need that money, I don't mind selling from some of these alternative coins. But it would irritate me quite greatly if I had to liquidate any of my XRP to pay for an emergency expense. Beyond that, we're all starting at different places. I spent a lot of time passively investing in index funds. So even though I'm able to adjust my investment allocations to be purely crypto, if you're just starting out with investing, I don't actually recommend that you do that. I think it would be really wise to take some amount of money and put that passively into an S&P 500 tracker. It's not going to grow anywhere near as fast as crypto does, but it is a very good safety blanket in case you do need an emergency fund. Like I was mentioning before, Ethereum, Bitcoin, Solana, they tend to follow the same patterns that XRP does when it comes to growth and also dips, whereas the S&P 500 is a lot more steady. I think that's a really good place to park your emergency fund. Again, this is not financial advice. This is just how I do it. This is an entertainment channel only, so do your own research before making any of these decisions, and also speak with a licensed professional, of which I am not. So to wrap things up, that's basically how volume investing is. We want to play to the advantages of logarithmic growth. We just want to get as much quantity of an asset as we can. And here's the good thing. The more of an asset you have, the less reliant you become on it having parabolic growth. I think this is especially important for XRP holders. Right now, if you're really close to the news coming out about XRP and you understand it at a deep level, there is reason to believe that this token actually could go to triple or quadruple digits in the very near future. However, that's not guaranteed, no matter how much we want it to be. If you follow the volume investing approach, even a double-digit XRP is going to be a big win for you, and it can make you into a millionaire within the next couple of years, as long as you're contributing a large amount of principal into this token. And if it does go to triple or quadruple digits, it's just more victory. You're getting to your retirement goals even faster. So it's going to be a win-win situation for you. When it comes to retirement itself, I think most people, at least here in the United States of America, would feel comfortable retiring at around $2 million. That doesn't mean you're going to feel wealthy. That doesn't mean that you can have any lifestyle that you want. But you will feel that it's sustainable and you will feel secure. I think that $5 to $10 million, that is where the fun starts. That is when you can start thinking about what zip code to live in, what climate to live in, and all the enjoyable lifestyle amenities that can come with that. But one thing at a time. If you're still new to investing, just get as much money into the market as you can. Find lifestyle things you can pull back on. And never get complacent. Always try to increase your income. We want to be strong on all fronts. I'm going to cap things here. If you enjoyed this video, as I stated earlier, the best thing you can do to help me grow it is to share it. But I also appreciate any comments that you guys have. I love feedback. This channel is only 2 weeks old, so the more you help me out, the more I can help you guys out in return. With that, I've been Andrew Fillion, and I will see you guys in the next one. Take care.